In this video, I'm going to show you how to record payroll journal entries. Basically, there are two journal entries that you have to make anytime you pay employees. So this could be that you pay only one employee or you pay 300 employees. Okay, there are always two journal entries that you make. And obviously, if you're paying 300 employees, you're going to total up everything and make one or make these two journal entries, but you're not going to have to make journal entries for each employee. You're going to make journal entries for all of your employees together. Okay, so there is one journal entry to record gross wages, withholdings, and net pay. I call that the employee journal entry because we're recording anything that has to do with the employee's pay, like their gross wages, all the withholdings that come out of their paycheck, and then their net pay, what the actual check is written for. Journal entry number 2 is where we record the employer's payroll tax expense. So I call this the employer journal entry because this is what we are recording the employer's portion of OASDI, HI, and then payroll taxes that are only applicable to employers like SUTA and FUTA. Okay? So let's look at journal entry number 1 first. So basically, the format of these journal entries is the same every time, okay? So in journal entry number 1, you're always going to debit wage expense or some type of expense that's like that, like salary expense. Sometimes you'll have a company that has many different wage expense or salary expense accounts. Maybe they have them by department, so they might have the sales department wage expense. They might have the accounting department wage expense. So in that case, you would have more than one debit, okay? But basically, the debits are always to some type of wage expense or salary expense accounts. And then what you're going to do is you're going to credit each withholding account. And so these are all going to be liabilities. So when we credit these liabilities, we are increasing these liabilities. Now let's talk about what these liabilities would be. One would be something like FIT payable. And why is that a liability? Well, we're withholding the amount from the employee's paycheck, and we're going to end up having to pay the IRS later. So we're not paying the IRS this federal income tax today, we're going to pay it later. So it's going to be a payable on our books until we pay the IRS. Another tax that is a deduction or withholding would be something like OASDI, payable. That's always taken out of a paycheck, or pretty much. HI, payable, okay, Medicare. Also, you might have state income tax that's taken out. You might have maybe some insurance premiums, health insurance premiums, or life insurance premiums. So we would have insurance payable. You might also have something like union dues that's taken out. Your textbook has fancy names for these accounts, okay? But what I am fine with is if you just, whatever the deduction is, like federal income tax or OASDI or insurance, just stick payable after the word, okay? And that way we all know it's a liability, okay? And then we're going to, of course, credit our cash, and this is our net pay, okay? So a net amount, and so that, of course, is credited too because your cash is decreasing. The company's cash is decreasing as it is paying their wages, and so the cash is basically the amount that the checks are being written for. Notice that this wage expense up here is gross pay, okay? So here it's gross pay, here it is net pay, okay? So let's look at a real example. So here I've got 2 employees, and this is basically a payroll register, okay? I've got 2 employees, one that made $1,000 this pay period, one that made $845 this pay period, and then I've already calculated how much OASDI, HI, FIT, SIT, and insurance that's going to be withheld from the paycheck. So let's see what our journal entry would be. So we're going to start out with wage expense. And the nice thing about payroll registers like this is they've already done the math for you. My gross pay is $18.45, so that's what I'm going to debit my wage expense for. And then I've got a bunch of credits for all of these deductions that are coming out of my gross pay. So I've got OASDI payable for $114.39. I've got HI payable for $26.75. I've got FIT payable for $174. I've got SIT payable, state income tax, for $50, and I've got insurance payable for $191. And then how much cash am I paying out? I've already calculated that too. My net pay is $1288.86. And this could be wages payable instead of cash if you're not paying cash on the day that you're recording this journal entry. Say you're going to pay it tomorrow, and therefore you'd have wages payable credited here, and then tomorrow when you actually pay the cash out, then you would credit your wage payable, debit your wage payable, credit your cash to actually pay out the cash to your employees. Okay, but this is basically what the employee's journal entry always looks like. Okay, you might have some different deductions in here, so different payables in here, but the wage expense is always going to be debited. Then you're always going to credit your deductions as payables, and then you're always going to credit either cash, usually cash for us, or in real life it might be wages payable. Okay. Let's look at journal entry number 2. So again, this is my employer's journal entry to record the payroll taxes that the employer owes. Okay, so here what we're always going to do is we're always going to debit payroll tax expense. Whoops. We're always going to debit payroll tax expense. And basically I'm going to put a question mark here because I don't know how much my total payroll tax expense is going to be. It's going to be basically the sum of all of my credits. Okay, so then I'm going to credit each payroll tax expense that I have. Like for an employer, payroll taxes are FUTA. So again, these are liabilities. They're a liability when I actually pay my employees, and then when I pay them to whoever I owe it to. For example, FUTA is again to the IRS, then I'm going to take that liability off my books. So it's a payable to the company as soon as the payroll is paid to the employee. Okay. Then I'm going to have SUTA payable. All right. And then other taxes that the employer has to pay are OASDI, Social Security. So that's going to be a credit. And then also HI. Again, that's going to be a credit. And then what I would do is I would just add up all of my credits, cross out this question mark, and put in the total. I would debit the total of all of those payroll taxes. Okay? So let's look at an example. Here again, I've got employee A and B. Their gross pay was total $18.45, and so then what I've done is I've actually calculated your FUTA wages, your SUTA wages, OASDI wages, and HI wages, what was taxable, and then I went ahead and calculated even your tax for you here. Okay, so let's make our journal entry. So basically what we're going to do is debit, again, payroll tax expense. That's always your debit for this journal entry. So payroll tax expense. And again, I'm going to put a question mark because I don't know exactly how much it's going to be yet. Let's calculate all of my, record all of my taxes that I owe. So FUTA, I owe $369. SUTA, I owe $46.06. OASDI, this should be the same as what I owed, sorry, not what I owed, but what my employees, what I had to deduct from my employees' pay, $114.39. Let's just make sure that's the same. Should be. Yep, there it is, OASDI payable. This is exactly what I deducted from my employees' paychecks, because remember, you're basically matching that. It's going to be the same for HI. It should be the same for my employee and my employer. So let's go back, and should be the same, is it? $26.75. Yep. So HI payable, same thing, $26.75. So then what I can do is I'll just add up all of my credits, all of my payroll taxes, and I end up with a debit to payroll tax expense of $190.89. Okay, so those are the two journal entries that you make. Okay, again, whether you're paying one employee or a million employees, it's always the same two journal entries. And once you pay somebody, this is the journal entry that you make, the two journal entries that you make. Okay. All right. So then let's talk about, well, what are our journal entries when we actually decide to deposit our payroll taxes? So I'm going to show you when you're depositing 941 taxes, or maybe you're depositing SIT taxes, or maybe you're depositing your SUTA taxes. So this is the time when those liabilities come off our books. Okay. So our 941 taxes, of course, are our federal income tax, OESDI, and HI. Okay. So if you look back, we can figure out what these amounts are. Let's go back to our journal entry number 1 that we made. Our FIT payable here is $174. Okay, so that's what we made. Well, that's what we deducted. So if that's the only payroll that we paid, okay, before we deposit, then that's the amount that we owe. So let's do that. So 174 is what we owe for 941 taxes. So again, these could be deposited semi-weekly or monthly. Okay, so we're going to debit our well, let me go ahead and write the ones that we are paying. OESDI payable, HI payable, and FIT, right? Those are the ones we're paying. We know the amount of our FIT, we just looked at it, it's 174. Okay, so I'm debiting these payables to take our liabilities off. Okay, now let's look at how much OASDI I owe. Remember, OASDI and HI, the employee and the employer have to pay the same amount. So let's just look at our journal entry here for our employer, and it should be the same. OASDI payable was $114.39. Remember, that's the same amount that it was for our employee too. So $114.39 times 2 means that I owed, that should be $228.78. Okay, let's look at HI real quick. HI, we owed $26.75. Again, the employee would owe the same amount. $26.75 times 2 would be, oops. And then what I'm, not $26.75, sorry, should be $53.50. Sorry, $53.50. Okay, so then I'm going to add all those up, and that's how much cash I need to pay to the IRS, and it should be $456.28. Okay, now we can deposit SIT the same way. If we look back at our employee journal entry number 1, we can see how much SIT we withheld, and you'll see here it was $50. So that's how much we need to pay to the Georgia Department of Revenue. So we go back over here to our slide, and so we're going to pay SIT. I'm going to put it over here. So we're going to debit our SIT payable, take it off our books, $50, and we'll credit our cash for $50. Okay? And then the last one that we're going to pay is our SUTA. And so here we pay this to the Georgia Department of Labor every quarter. So if we look back at our journal entry, our employer journal entry, you'll see SUTA that we paid was, SUTA that we expensed was $46.06, and we put it in our SUTA payable. So now we need to pay that off. So we'll take it out of our SUTA payable. And so we'll put it here. SUTA payable, we're going to debit 4606 to take it off our books, and we'll credit our cash 4606. And that's how you make journal entries for payroll.